Yep.
I got stopped on a Russell trade this morning, and let's go through today because I want to make some comments from a couple of the charts and things that I'm seeing. You guys sending in, and I'll be general with this.
Do we have anything on the screen?
No, not yet.
Okay, good.
I haven't put anything up yet. Facts, I'm still.
I just don't want to miss anything, sorry.
No, you're good. I haven't really put anything up, but I'll throw something up here. And well, let's just go. Let's just get the screen going here, and then you guys can see what we're doing. All right. A couple of things, guys. I think we've talked about this to some degree, and that is things can get really kind of sloppy. We get some real poor action when we get these low volume days and we get into these holidays like this. And I think we're going to continue to have that environment into the end of the year and until we get into the first business week of January, where we get poor price action. Now, today was, in my opinion, even though there's been some moves, they were relatively poor price action and something that, well, let's just go look at charts, okay? Are you guys getting a bit of an echo?
I'm good here.
No, sounds good.
Okay, I can hear. Okay, good deal. I'm good then. Okay, let me take that off. That's just a up-down volume line that we're looking at. And actually, let me just talk about it for a minute, because we'll talk about this in more detail. But really from the open, one of the things that I kind of like to watch along with this is how erratic this becomes and how smooth or trending it becomes. And when it gets real, whippy like this, what it tells me is there really isn't a lot of commitment to one side or the other. Now, guys, this little breakout failure right here is suspect. Let's just go look for a minute. There's a 15. It's in an area of congestion. It's had a strong move up, which provides very little support back on the way down, at least on a 15-minute time frame. And I'm not sure that it's going to roll over. This is one, and I'll address this because right here on this 5-minute, let's go look at a 2-minute real quick. Here's our 2-minute, and one of the things that I would wait for now, and again, in fact, guys, this is one of the things I want you to write down and put in your trading plan, put on the wall, put on your computer monitor. And as I talk about it, this will make more sense. But the words that we're going to put down is, what do I want to happen next before I can enter a trade? Or what needs to happen next before I can enter a trade? Okay, now, the reason that I say that is this is a good example of a situation. Let me get rid of that line just for a minute. We can talk about that at a later point. But this is an example where we could get, and this is obvious now, we could get a breakout failure here, and I suspect that we probably will. Just judging from where the other contracts are with respect to support and resistance and all, it wouldn't be surprising to see one occur now. This is a good time for me to say I'm not going to take this right off the bat. Okay, it's a little early. So if I'm thinking, all right, what do I want to see before I want to take this? Is ideally, now we don't always get what we ask for, but I want this to come in, and I actually would like to see it break this base. Okay? Now, very far and fall, because you can see that we've got void down to really this area here. I don't want it to travel very deep into there just yet. What I'd love to have, this is what I'm going through in my mind right now, and I want you guys to start thinking this way and say, all right, now that I've got a potential setup, what would be ideal? What would I like to see in order to get into this trade? Okay? And so the question is, what would it be? This is what I'd like to see, is a lower high over here after I break this support and then go again. And this may come over here in the form of a topping tail, or this may come in the form of a green bar being ignored right over here. But unless I break this, okay, and the other thing, now this is order for me to short. Now, as I look at these longer time frames, guys, and that's why I'm thinking about this, is I'm not really big on the idea of going long here. Well, I think that that's possible. And, you know, if you look at these time frames that we've got up here, could we go long? Could this go long? The answer is sure it could. We're going to have trouble getting, I think, much higher up here on these indexes. And my suspicion is that we'll probably see, well, these internals are neutral. They're all over the place. So let's go back to the 2. And let me tell you what I would do. Is I'm not ready to do anything right now. There's a possibility this thing could go higher. So here's what I want to play. Here's where I want to play. Let me go back and I want to pull this up, because it's good to review this. I'm going to pop this into our page here. All right. This is either going to roll over or it's going to base. And I don't know which one it's going to do. And then move higher. So here's what I'm going to, this is what I'm thinking out loud, guys. And you guys have got this. You just probably don't know. You've got this. Here we go. Let me pull this in, and we'll look at it.
Yep.
Okay. Here's what, this is in your trading plan. This is what I'm looking for. See this bullish basing pattern? We have that exact thing going on right now with this chart. So if I'm going to get long, I don't like that breakout failure at the top, frankly, but as long as it'll hold this base, see how we've gotten a couple of red bars ignored, a couple of times this thing's turned down, only to turn back up again. So if I'm playing a basing pattern, a bullish basing pattern, and at this moment in time, that's what this is. So what I'd like to see is, I'd like to see this thing come back down in near the base, and it's okay even if it was to break this base by a tick or two and then get an immediate reversal. I could take this long if all these internals are still holding together, and they look like they are. So one more attempt to come down into this lower area would be kind of ideal, and get a reversal bar or a bar ignored. I don't want to take a COG right here going up. I'd like to see this thing come down into the base and then give me a reversal, either a bottoming tail or a red bar ignored, or a little breakdown failure would be even better. But I'm not really ready just to take this on a COG right now. Okay, that's what I found to be the most successful in these bullish bases, if this is going to go long. Now, if it's not going to go long, then it's the other scenario. I'll be looking for, and gosh, we just walked into lunch, guys. This isn't a good to follow. Or, guys, I'm getting an incredible echo feedback. It's just an echo.
Yeah,
Are you guys hearing it?
I hear it now. Maybe everybody should mute when they're, probably someone's, I don't know, has anybody not got a headset? Maybe their feet coming back through their microphone.
Yeah, is anybody on speakers?
I am. I've done myself a look. Are you okay?
We can just, if we all mute ourselves, that might stop it.
Yeah, let's do that. Let's just mute everybody and then just pop yourself off, mute. I know that might be, inconvenient, but it's real distracting. If we can avoid that, that'd be great.
That worked. I don't hear it anymore.
Okay, yeah, then just pop your mic back on when you're ready to talk. But see, this is the time of day that we got poor odds either up or down, and that's what kind of ruins this play time of day. But do you see why thinking forward and saying this is what I want to have happen before I can trade? So I have two scenarios in mind here that possibly I can go long, and possibly I can go short, depending on what occurs. But before I do that, I want a completely different set of circumstances need to occur before I can go long and before I can go short. So if we have those things in mind, then as those setups develop, it's a little easier to be ready for them and to anticipate either side. Oftentimes, we're not going to be thinking either long or short. We're going to have a bias. My bias right now, at this point, I'm open to either long or short, because looking at the charts, there's a little more room for this to go higher. I agree. What I'm not seeing happen that is a little bit concerning on the long side is I'm not seeing any of the other contracts, be it oil, be it the euro, be it, the financials have recovered a bunch. The stocks are now rolling over. Well, the trends are still pretty strong, but I'm not really seeing that strong of commitment from. I am a little bit worried because the euro's failing, and obviously the pound's failing, and the dollar's still strengthening, and that's been the nemesis to the market right now. And I think if we had those things at our back, we had more strength out of the euro and a little more weakness out of the dollar, then I think higher would be easier to get. But see, oil's struggling and the euro's struggling, and those are all complementary right now to the dollar going, or to our markets going a little higher. They don't have to be together. They can get detached, and from time to time they do. But it would certainly be nicer to see, and that's what ignited this move up this morning, was the fact that the dollar broke down, and the euro and the pound and the oil all broke out and moved up with the E-minis. And that's what popped up these E-minis this morning. But now they're not doing that. They're not following through at all. So that doesn't give me a lot of faith in the long side of this because of the overhead supply that we're coming up into and what's up there. So that's what I'm thinking for the purpose of long. I don't like this. That's what I want to see long, is that we get a failure down here at the base, and then a long would be more appealing. I'm not ready to short it yet, guys, until I see a little more weakness, because it's still a bullish base, and we're up on the trend. At least the 5 minute. It's I don't want to push this. Now, looking at the 5 minute, guys, this is where we should have some trouble. I mean, this is obvious. And the trouble that I'm talking about, I don't know whether it's going to be trouble or just a stall. But that's the thing that we're looking at, and we could have some trouble. And so let's wait, and even on the 5 minute, let's see one more push. It would be ideal, as I say. Let's watch this, and we'll go on with our lesson. But let's watch this, and it would be ideal to see this actually break a little support, or at least try to repush and give us a topping tail, and then I could consider this thing short, because I do have void back down, and really, where's my target? It may be all we get is right here, if that were to occur. I would be concerned about this area first, and then we'll start trailing as we go. So it's shaping up to where it could break and go lower, or it could hold and pop up again. So we just have to wait. We just have to sit. But being open to either of those things, I think, is important. So ask yourself, as you get into a trade, what would you like to see happen before you enter the next trade? And I think that'll help keep you on the right side. And the other thing that I think will help is it will keep you from getting into a trade too quickly.
Yeah.
Okay.
New, can I ask something?
Yes, Carl, please.
I'm sorry. Can you look at the TF, the 1142 baby bar?
Yes.
Which is a
You betcha.
retest? You were gonna
betcha.
short it, right?
I got stopped, as you guys know.
Oh, I'm sorry.
So let me flip over to it, and we'll talk about it. And I'll show you where I shorted it. Is this no? That's the 2. I don't recognize this chart. Let me get to the 2, and we'll recognize it. There we go. There we go. All right. That's still a 5. What's wrong with me? Here we go. Okay. Here's the bar, and I actually took this on a 1 minute. I shorted this bar. Okay. And I actually just left my stop up here, and I'll flip this and guys, let me throw up a couple of charts. And I was wrong this morning, and that's okay, because I am wrong from time to time. But look at what's going on here, and this is why I felt the way that I did. Is this was basically sideways, and we've got a pivot high here. We've got these lows, and here's our open. We gapped up, couldn't overcome any supply, but we did lose, and even though it was by only a tick or 2, we did lose this pivot and came down to this base of support. So even though I had a higher low here, okay, we had 100% retracement down to this base. That's ideally, guys, if you think of an up market that's strong, okay, we could retrace into this base, and then it should go on up again. Now, you remember, if you go back and look at the way, good charts work, that's what'll happen, is we'll get a retracement back into a base area, and then bango, it will keep on going and move higher. And that's what a strong and a decent market should do for us. Well, it didn't do that this morning. And what I was seeing was a lateral movement without any ability to overcome any resistance. Now, we can go look at the other markets, because there was a couple of them a little bit stronger. But this, again, I had 4 ticks on it. I wouldn't say there was much of a divergence. A little, but it wasn't great. The ticks were really kind of insignificant, but it popped up without any real significant tick push. And then this thing rolled over, and if we look at it on a 1, it's got the stabilizing bar that FACS likes to see. If I understand the way you call those FACS, is don't you like these little stabilizing bars?
Absolutely.
Yeah. Guys, give me 1 second. Let me take this phone call. I'm sorry, but I better grab it.
Dust. Phew! Ay.
Okay, I'm back. You guys can hear me okay?
Yep.
Yeah, I got you.
Okay. Let's go back to this story. Again, as we look at what was going on with the overhead resistance and all the stuff that went with it, I felt like this was a pretty fair time to be shorting it. Let's go and look at this YM. And I didn't like, frankly, let me go to a 5. I didn't care too much for the long call down here that Kurt made. I think he picked it up right in here somewhere, if I remember right. Yeah, it was this call. And that's okay. That's just a personal preference. It ended up working out. But, you know, guys, again, we go back and I look at this stuff up here, and to me, there just wasn't that much room. And though this came down, you know, pretty hard, we had big volume on it and all, it popped back up, a couple of retests. This isn't, we had more time to develop a bottom. Guys, I think this is my opinion, and you guys can decide whether you believe this or not. It really, my opinion is this is still a fairly low odds trade, and I didn't care for it. And the reason being is, guys, today, and I would say, when we get this kind of volume and we get this kind of stuff that's going on, we can go back and look at yesterday and look how well prices actually worked yesterday. They worked off the things that we've been talking about: support and resistance on the longer term time frames, coming back up into a base and rolling over. Those are principles, and those are things that work the vast majority of the time. And because this one worked out, guys, don't put this in your plan necessarily, because we really hadn't had time to deal with this stuff very well. A couple of pushes up into here, and what triggered this whole deal was the breakdown of the dollar, which got the euro going, which got oil going, which got everything kind of going. And had the dollar not done that, of course, the dollar was up at resistance where it should have some trouble. And so the possibility, I guess, is there. But in my book, this is still a fairly low odds trade until you have some time to deal with and pick up this supply. This is a fair amount of supply. This is all morning. This wasn't just a pivot low and turn around. This was a fairly big base. So for me, I didn't care for the long. Now, it did work, but would I change the way I think and the way I trade and the way in the future, would I take this again? No, I wouldn't take this again. That's me, guys. And you need to siphon this through as you know, with your trading plan and what you do. But I can tell you, until we deal with this stuff overhead, this sort of event is not that usual. We had the other markets, the NQs were actually strong today. The Russell was rather weak, and the ES was dealing with the same issues. NQs were the only ones that were pushing out. And if the Russell and the NQs are in harmony, then I have more confidence in that. But when I only have one market that's strong, I have little confidence in the rest of the market. And that's just what I found over time, is that I like to see a little more confirmation than just one market trying to lead the way. So, having said that, that's why I didn't like it, and I felt like that with what was overhead, and I think I would still do it again, that this short, given where we were with internals, and at the time, guys, and I know this wasn't really trending, but at the time, our up-down volume was still going lower. We were having a divergence in price, and the up-down volume was still working a little bit lower. So there was enough reason for me to suspect that this thing could fall apart and come back down. I knew it was going to be kind of slow because we had all this junk here, but I thought, man, it's worth it. I don't see the markets going any higher. And I was wrong, but that's okay. That's okay. It was 7 ticks or 8 ticks, and I was out of this thing. So it wasn't a big deal. So normally, I think this trade would have worked.
That's where I took the NQ short.
Same spot.
Same spot.
Yeah, Paul.
It's a little different picture, but it's still like.
Yeah.
I don't think there was anything wrong with that short. I really don't. I think it made sense, given everything that we talked about. There were, in fact, let's talk about, while we're talking about these, because guys, these are things that, let me go to 2 because this becomes a little clearer on the 2. Here are some trades from yesterday, okay? And I picked up two trades on the Russell yesterday, both of which worked out really quite nicely. And I want to put the YM chart up here at the same time. And I know this probably looks a little different on some of your charts just because of the scaling, but let's look at them. And let's go to the YM, and I'll put a 5 up here because it will work. And this is part about, in fact, some of you guys that were in the ETR yesterday, did you guys hear that discussion that I had? Facts, Dave?
Yep.
Do you remember this?
Yesterday I was not on the line, so.
Okay. Look at this, guys. This is around the top, and again, this is the key when I like to draw in these resistance lines, and and again, you guys know that physically I don't do this very often unless I'm just having trouble reading charts, but mentally I'm looking at this and seeing this. So let's just do it. But I'm looking at this as a real problem area, okay? And yesterday, we've got a rounded top that, it's nice and easy to see. And rounded tops, as you know, are far more potent than is a pivot top. So with that in mind, prices break down on the YM. Now, guys, this is really elementary, and we're going to talk about this in another concept. But prices break down, and they come back down. Look at this, guys. This happens so often that we have these topping tails, we have this base right here, and prices will come. See how they popped through? They came back down to this top of this base, and they pop up again. This is a frequent catch area as prices come back down. So as you go back and look at these bottoms, how they form, these topping tails, these bases that are formed in these bottom areas oftentimes are pretty good support. Well, YM comes down to it. So I'm feeling pretty comfortable because of this break. So now all I'm looking for is I'm just looking for a retracement back into some overhead supply, and I know YM's going to have trouble up here. ES looked very, very similar to this. So this was the picture I was waiting for. Now, the Russell, yeah, this is the same time period. The Russell didn't actually get quite as high. So where their base was up here a little bit higher, whether it's there, call it there, wherever you put that line, it was a little bit higher, and they didn't get there. But what they did do is they gave me a double top. And guys, go back to our trend. Let's go back and just, guys, I'm gonna beat this in your heads before we're done. Okay, this is a good place to be still looking for shorts. We've lost support, clearly lost support. Small retracement. There is a little double bottom here, but I'm not really concerned about this double bottom, and certainly I don't want to take it long because I lost this support. Now, I know that, well, forget that. So we go back up, we deal with a little bit of resistance. YM is in a place where it's going to have some trouble, and because of the weakness here, this is the contract, or the NQs. NQs were much like this one. I want to short the weak ones, I want to go long on the stronger ones. Given the void and all. But guys, in a downtrend, these are my favorite setups. And these are the ones that I really, really key in on. I key in on double tops and breakout failures. I was just lucky to get this entry. I was watching this one, and this one could have been taken. Okay? I didn't actually take that one. I thought it was just a little too soon. But it could have been taken. Then I would have been forced to look. Had that broke, I would have been forced to look for another way to get on this thing. But I was lucky in that I got this double top over here. But again, the stop has to go up here. And if you'd have taken this one, you'd have still been fine. There's nothing wrong with this entry. I just happened to be lucky enough to get this one. And away it went. Now, as we were coming into this area, I took some off coming into here, and I don't remember, I got to go back and look at the numbers, but I took some off coming down into here, and then I ended up taking some off here, and I believe this stopped me out on the back. No, actually, this stopped me out on the back. I held through all this, so I came out in 3 parts, and ended up with a really nice trade out of that. But here's the key. This is the part, and we had about everything we wanted. We didn't have a major tick divergence, but it was a minor tick divergence, but it was still at resistance. And this little breakout failure, this little pop-up, this double top, guys, these are powerful. And this is the setup. This is the retest. This is that second entry that I like. And either one of those entries would have been sufficient. It's just lucky that this one was the one ready to go. It wasn't quite ready before, but leaving your stop up there where it really belonged would have been fine, and it would have been mandatory, actually. And then away you go. Any questions on this, guys?
That was a good enough setup for you to take us during the lunch hour.
It was. Absolutely. Because, you look at what went on during the day, and there wasn't a big move, this morning. Well, there was a little bit of a move. Well, going back, there was a nice move up this morning, or that morning. The Russell didn't enjoy it. The NQ or the YM had a pretty good move. The NASDAQ did not. The Russell did not. There was really very little move comparatively. And I actually typed into the room, if you guys remember, guys, watch for this head and shoulders. Before this thing hit, I said, guys, watch for this to become a head and shoulders. And it was under 10 minutes or so that this thing actually hit, and we got in. And you can see that. This is pretty obvious here. Have I been through my head and shoulders rules with you guys?
No.
Let's do it while we're here, okay? And these are my rules. Now you can adjust them to whatever you want, but now the 6E's running, guys, Euro's running. This probably will move the market a little higher. I'm going to look at something. Okay, let's go look at the 2. I like 3 pushes down, and this isn't an actually. It's taken a long time, and because of that would have been my preferred entry, right there. And I want you to look at this, okay? Look at this, and I'm okay leaving this alone. This time of day, we've had a good move here off this low here the last hour. I'm okay leaving this. I just think the upside is going to be really, really tough. But look at the bar formation here. And now let's look at this. Get these 2 pictures in your head. Look how similar this bar formation looks. And look at this one. Oops. That one. You see the similarities in those pictures? Let me go do this. Let me put this chart and make it stay on top. And look at these similarities. In these pictures. We've got 1, 2, 3 red bars down. We don't really have quite the same thing here, but very similar. 1, 2 red bars down that are ignored. And we just happen to have 3 here. I like the second, or preferably the third. And we got 2 nice ones here. And so, as we were talking before, you ask yourself, what needs to occur before I want to enter a trade? And this is the scenario that we actually talked about. So could this trade be taken? And I want to buy it here. I don't want to buy it after it breaks out up here. I want to buy it above this 2-minute bar that got ignored. That's kind of what I want to buy, is right there. I want to buy these as low into this base if I get the failure that I'm looking for, as opposed to later. I don't like breakouts above the tops. I like this kind of a little reversal. But you see how similar this pattern looks? You know, guys, memorize this pattern. Put this pattern in your trading plan. This is a good, fairly reliable pattern. And then we just trail it. Now, what needs to happen, and what would be better, is look how once we broke through the top of this base, how there was a fairly decent move out of it. Now, this is what's wrong with this one, is as we look at it, what's wrong with this one is we're not getting that igniting move through it. We're not getting a good move out. And what it's telling me is there aren't any stops getting hit up here. What I want to see is when it does break, I want to see, and then this thing should break fairly quickly after you see these types of bars. The fact that now that it has broke, even though we're by only a tick or two, now that it has broke, this is still suspicious to me, because we didn't get the igniting move up out of this base that we should get on a good bullish pattern. And part of the reason is on the larger time frames, we don't have a really good void, as we looked at before. And that's what puts this in a little jeopardy. So, guys, this is the pattern. You look at the basing pattern, and again, this is where we know, this is how we start learning how should it respond. What's the proper action, and what's not proper. And realistically, we should not be losing, on a closing basis, we should not be losing any 2-minute lows on a closing basis on these bars. If this is going to break out and it's going to move up into this, assuming there's a void, we should see in the first few minutes, we should see a pretty good move up out of this base. Does that make sense? And when we fail to get that type of a price reaction, it's telling us something. And what it's telling me is there are no stops, and now our breakout guys are not really participating in this either.
So is that how you manage it then, at least for the first few bars? You trail the red bar?
Absolutely. I'm going to watch this thing. And if I were in it now, frankly, if I were in it now, I would be taking something off of it. I would be taking something out of it. I wouldn't take perhaps the whole thing out, but I would take something out of this trade. I wouldn't have a full lot with the way it's responding now. It's just not cutting it.
Yeah.
Because this isn't the action that we want to see. So, guys, this is why when you, and I'm going to encourage you, and some of you are doing it, I think, very well. And if you think I'm all wet with this, that's fine. It's your deal. But I'm going to encourage you to put pictures either on the wall. I love Paul's wall. Paul, maybe with your permission, one of these days I'll show him your wall.
Yeah.
I love it because he's got these candle formations and these situations and this stuff up on a wall where it's there. He sees every minute, every day, and I think it's great. And what it does is it helps us to recognize how things should be acting, and this is not acting right. So when they're not acting right, that's the difference between knowing, can we leave a trade on a while, or do we need to take something off? And even though the setup hit, and we're in the trade, there's things that tell us along the way, is this acting appropriately? And my answer is no. Could it continue to go higher? Yeah, so I would be willing to leave a little bit on here, but I wouldn't be willing to leave a full lot on here because it's not acting right. Now, I'm all about high odds. And the stop I had today is the first stop I've had trades on Monday, one on Tuesday, one on Wednesday, or actually, excuse me, today's Thursday. 3 trades Monday, 1 trade Tuesday, and then 3 trades yesterday. And then I actually did pick up my losses because I got long the euro. But I'm basically break even on the day, or just a touch ahead on the euro. But I had the 1 stop this week on that Russell trade. But guys, I'm all about best odds setups and best scenarios so that I don't have big stops and I don't have big losses. And I just know that if things aren't acting right, then the chances aren't very good that I'm going to have the outcome that I want. Now, see this thing move? Okay. Look at the picture here now versus what we saw. Now, let's go back and we really can look at this a little closer for a second. Because what I want to do is see if I can't get me a line on it. Now, I don't know which darn chart I need to have up. Where'd the darn thing go? It's behind me. I don't want it behind me. Hang on a second. I'll bring it back. Rookie at the controls. Okay, this will probably be a little better picture now. Okay, I drew that line in just so I could get an idea. We hadn't actually broke this. This is really what I want to see. Okay, so I may have been just a little quick to tell you it wasn't acting well. It still wasn't acting great. It should have acted a little better than this, frankly. So I'm not. Again, the analysis I think is correct. Taking all of it off, as I said, may not have been prudent. Taking some of it off, I think is prudent. But this is the reaction bar that you want to see fairly quickly. Now we're seeing volume pop up a little bit, even though it ain't much. So 2 things are happening here. I don't know. We don't know to what degree, but at least we know that the breakout guys are jumping in this, as well as some stops getting hit. We'd have to watch a tape to really get a feel for which part of this is which. But regardless, now you see it. Now you see that reaction to the breakout. That's good. That's what we want to see, and we should see a few good bars up into the next area of supply before this thing poops out. So let's go look at this on a longer time frame right now and say, where will it go? Well, there's a 15. So as we look at this now, we can draw our lines. And say, there's our critical point, and anywhere before then is going to be a little bit critical, because this is a bit rounded up here as well. I don't know if we're going to go all the way to the high. I don't know if it's going to happen right in here. There is a little room to move higher, I agree with that. But I'd be careful as we approach up here. But the important part is that we kind of have a feel for how it should be acting, if it's going to be acting right. And again, guys, this looks so much like that pattern in the trading plan, the way these bars are being ignored. And these are the kinds of patterns that have the high odds of repeating themselves. The lack of volume, the lack of void above, all that stuff is pretty kind of what's causing this pause here as we are attempting to break out. And if you can get a good move up into resistance, like we saw on the trading plan, okay, if we can get a good move that take a long time to penetrate and break that resistance. That's the measure of how strong the push is going to be. When you get this feeble attempt, and it takes a while to work it off, then you have some real concern, and you should have. Now, the one saving grace about this whole trade, and this is where I know you guys, this is where I'm going to differ a great deal, and you're going to have to kind of filter this through again and determine if this is in your plan. But this is where Kurt and I style changes dramatically, and that is, I like these shorter time periods. But secondly, guys, think about this. If you're in this thing long, and it comes back down and trades below our breakout, what's your thought? Are you gonna sit through this much retracement? Are you gonna let it come back down underneath this breakout area? Will you allow that much retracement?
No.
No. Now I won't, and I'm not saying that you shouldn't. Well, actually, I am. I'm saying you shouldn't. Okay, let's look at this on a 5. And as we get into the bar-by-bar analysis, and again, guys, knowing what is proper action and what is not. Now, let me give you one more bit of information that's kind of important. The YM has a tendency to pop through a high or pop through a low and then come right back in more frequently than does a yes, or NQs, or the Russell for that matter. I don't know why it is, but the last little while, when I say that, it's been a tendency of the YM to do that over the last number of years. It didn't used to do that so much 5 years ago, 4 years ago, even 3 years ago. But for whatever reason, I find that it's not uncommon for this one to make a new high, and the other one's not, and then this one just to come back in. But this becomes, guys, think about this. You can see this good bullish consolidation here on the 5. And then we break out. This should not come back in. So where would my stop be? Theoretically, a breakout failure occurs when we trade below that bar. Now it's okay if it meanders back to the top of this base, but if it comes back quickly to the top of this base, then guys, there's, Houston, we have a problem. So a slow 45-degree angle back to this base is not alarming, and we should expect to see buyers step up at this base if in fact this trend's going to hold itself. Because by definition now, is this not now pretty good support? That was almost an hour. This was an hour. From the time that this broke to the time that our top till it broke out was an hour. That's a pretty good base. It better hold it. So, how would I play this? Okay, I could play this, again, you got to ask yourself, do I want to play for, if you're buying it down here at 37, actually you won't be buying at 37, you'll be buying at 40. We know the lines above us are areas of resistance. If we were to try to get in now, is it enough room? Given what let's look at the internals aren't bad. Internals look pretty good, actually. There may be enough room. Maybe we can play for 12 or 15. With any luck, we might even get to 20 ticks on this. So you ask yourself, is there room? Do I feel comfortable playing it? And if the answer is yes, then go right ahead. Then go ahead. But this is a failure that we would want to stop and prevent from occurring. And we would be able to get out of here, break even. And guys, we would never want to leave a stop down here, this far, after we had a failure like this above us. Okay? At least that's not in my plan. That's just far. That's a failure that just should not occur. Had that 5 minute been reversed. As it is, it's working out fairly well. It's working out okay. It's not great, but it is working out. So, again, I hope you guys have captured this. If not, at least you have it in the trading plan. That should be part of your plan, and you should have rules on how you're going to trade this and where your stops are. Now, guys, just by way of information, when I put my stops, I put them about 4 ticks below my lowest point here on this base, because I know that it's not uncommon to have it pop down and pop right back up, and about 4 ticks will usually give it to me. If I have a bullish consolidation such as this, and my internals are confirming, which they actually are right now, it's okay to have a little breakdown. It's even better to have a little breakdown, because it catches a few sellers down there that are trying to short this thing. So it's okay to have those little breakdowns. You just don't want to see a good close below there. That's not right. You got something wrong. But you see how this set up? It looks so much like the one in the trading plan. And guys, this is key. There's times when we want to see range expansion bars hitting on breakouts and on failures. And you want to see these things occurring rather quickly. And what it tells you is that again, I'll go over this again so you understand this, is that we have 2 things occurring. Stops are being hit, and breakout traders are buying it. The momentum guys are going to jump it. And that's the key to seeing, knowing that you're in the right trade. Any questions?
If yesterday's base that you shorted had just gone up and not given you an entry, you would not have entered long anyway, right? Or just because of the resistance that was over, and you're watching a breakout failure, but if it never gave a breakout failure and just moved up, you would not take a breakout there, right? Correct?
Correct. Let's go back. Yeah, but
which is actually an eye opener for me, because if you go back, I mean, I can see clearly it's kind of like a Head and Shoulders, but it had also based right with the early morning.
You take, in fact, hang on,
right?
Paul, Dave, hang on. I'm going to give you controls.
Okay.
And you can take the mouse and you can
I'm moving it now. Okay.
Yeah,
so
you got it.
I'm just saying, if I was to draw a line right across here.
Mm-hmm.
I mean, I'm not saying I would either, but I know when you don't have the moving average, but like the 20 MA is coming right up here, so I mean, I can see how you're kind of opening up my eyes here, because I would have seen this as the 20 MA is coming right here. This is basing into the 20 MA, and while there is resistance here, if it traded up, it's going to trade over this, and I would have seen this as a double bottom support. So
where's the support, Dave? Now I'm going to pick on you just because we're having this conversation.
That's good.
So where's the support?
Well, you're right. I see it more now. Now it's broken down, and that's why I'm saying it's kind of an eye opener for me, because I am seeing how my thinking needs to change, because I do see it broke down on volume, and it's only retraced halfway to the top. So yeah.
Let me walk you through. No, Dave, you're right. Let me walk you through, and I think this will help. Guys, let me walk you through a Head and Shoulders, and let me tell you what my requirements are. And pen these down, guys, because this, I find that these are reliable if we get the proper formation of a Head and Shoulders. So let's first go over, and obviously we have to start forming the head, which we did up here. Okay, so we've got this breakout, and it needs to be, okay, first rule has to be at resistance. So we go back and look at this, we'll find in a longer time frame there's some resistance up here. Has to be at resistance. The next thing, and this is in order, when we come back off the head, must break the neckline or test the neckline. So prices must come down to here. That's number 2. Alright? If they hang up higher than this, I'm not interested in the head and shoulders. Now, I could still take a double top or something, but I'm not going to play it as a head and shoulders because they don't work out unless these things form this way. When they'll break this neckline over here on the right side, now my mind is going to go to, okay, I'm going to play this as a head and shoulders if I get the setup. So this is critical. This is critical. I've got to at least test the neckline or break it, and preferably break it.
Yeah.
Now, from there, the next thing is I want this to be as symmetrical as possible. So if that's my left shoulder, I want this to return and come up into and very close to this left shoulder. The more symmetrical this thing is, the more uniform, I should say, this thing is, the more our odds, the higher our odds are going to be that we get a fair trade out of it. Now, here's the next really important part of this trade, and that is I never want to take the first COG. I do not take this trade. I do not take this entry. Okay? This is a no. Alright, I want the second entry on a head and shoulders. Now sometimes that's a little bit lower, sometimes it's not, but I will not take that first COG. The reason being is I found that first COG fails about half the time, and that's too high. That's too high a failure rate for me. If I wait for the second, then my odds on this setup go up into the 75% range. And that's acceptable. So I'm looking for the second setup or the second COG. And again, that could have happened, and that would have been acceptable over here. And our stop obviously goes to the high. Or, guys, the other thing I'll take is a breakout failure. Now, and that usually will come as the second entry. But we get a base, and I will take a breakout failure immediately on the low of the breakout bar. But I will not take the first COG. So those are your key components. If you guys wait for those components to set up, I promise you, your head and shoulders patterns will turn into 75% batting average for you. Anything less, or if you scrimp on those rules, then your odds are going to be lower. Any questions?
I have one.
Yes.
While you were talking, I was short TF, and I would like to tell you why, and I want to hear your feedback. Like,
Okay, I'm going to tell you already. You didn't wait for a retest, but go ahead, tell me.
okay, you see this bar? What is it?
Here, take the controls, Carl. You can take the controls.
All right. Got it? Yeah, I think.
Yep.
Okay. I took. Okay, this was obviously tick divergence here. If you have the ticks here, you're gonna see it clearly. And
Yeah.
then I took this baby bar, and I took some profit, but I waited, but since it didn't work all the way here, it took me out. I mean, I made some money. I made about 15
Yeah.
ticks. But would you consider taking this like a counter trade, at least scalp this baby bar, or was it a
You know,
mistake?
Here's how I would never take it up here,
All right.
Carl.
Okay.
Personally, I wouldn't take it here.
Okay.
In fact, let me do this. Let me go do this, because this is worth us having this discussion. Hang on one second. Let me get these lines off of here, because this is actually a good place to have this discussion. All right, now we've got our ticks. And what you're saying is this was your entry
Yes.
here.
Actually, honestly,
I
I
can
wanted
see.
to get in before that on the tick divergence, but I thought it's too early. But then
Okay.
this small retest, I'm thinking, let me take it, So it worked
Okay.
out a little bit, but not so good.
Yeah, and let me tell you, and it's okay to I mean, if you want to take these, that's really up to you. But let's walk through what's really going on here, and let me tell you why it didn't work. Okay, and you're obviously you're gonna know why. But guys, this is a pretty strong move up, and this is the base that we were looking at in the YM. Actually, it started at 9 o'clock and went this way, but essentially this is when this base started forming in the YM. But looking at this, the first thing that's really wrong, or at least for me, and why you made a few bucks, and you can often scalp these for a few ticks if you're just going to be really fast with it. And I know you watch 100 tick, Carl, and that's great. If you like these, you want to take these, there's no problem with it. For a good trade that's going to move very far, it's simply not going to do it. What I would prefer, and the reason being is, think about this, is we've got all the internals telling us it's up. We've got the trend that's now up on the 5 minute, and it's pushed rather vigorously up through here. Until we actually lose some support, or show that we can lose support, and we've got these small areas of a little bit of congestion here. It's rather insignificant. These areas, rather insignificant. There is, and if we flip this to a 5, you can see that there really isn't that much support. We've got this one area on the 5 where we have a little support, where all these 3 bars have some overlap. That's our support area. So, looking at this, prices come down into support, and then they rebound, they retrace. Now, given what was going on, I could see you attempting a short here because of the lower high and the tick divergence and all that stuff. But this is too early for me, and until we actually lose some support, I don't like to go counter trend, because I know that these moves are going to be less productive than one in the trend. And that's the only reason. If you like counter trend scalping, I can't tell you not to do it, and I won't tell you not to do it. If you've got a system that gives you pretty good odds, go ahead and do it. Let me just caution you on one thing, and that is, let's go back to our 2 minute. Here's what happens when we get caught in the wrong direction or in the wrong trend. We all know that good moves come in the direction of the trend. That's where the big moves come. So, no surprise there. However, guys, think about this, and you'll know that it rings absolutely true. And that is, when we are looking for shorts and we're thinking short, our mind will not register longs. It doesn't matter how obvious the pattern is. It doesn't matter what just happened or what failure just occurred or what's going on. Our mind will be seeing patterns and situations that we relate to short trades. That's all it's going to see. Now, if you stay open and you walk through the exercise that we just did on that consolidation base, and you ask yourself, what needs to occur here before I can enter a trade? What do I want to see happen? What needs to give me that confirmation? Then your mind is going to be more open. But as long as, if you're thinking short and you're actually against the trend, when the good move comes, you won't catch the good move because you're going to be thinking short. Your mind will be seeing short, and you won't see the long setup hit. I promise you. So that's the problem with scalping short. And unless you can learn to flip your mind, now I know a few traders who have done that, who have been able to do that, and can actually flip trades fairly quickly, and can deal with those conditions. I have not met many who can, and I'm not one of them. So I have to stay with the trend, and I have to wait patiently for the right trade setup, and then I go. Yesterday I got about averaged 75 ticks on the Russell, and I took a corn trade that gave me 45, and they were all in the trend. You couldn't have scalped. You couldn't have scalped against the trend and got more ticks than that. You would have got far less. So I know that, and you guys know, trading in the trend is really the key and where you get your big moves. So the caution I warned you is it's okay to scalp these, Carl. And I know you're pretty good at your charts that you've seen. You're pretty good at reading these things. My only caution is does it cost you the bigger move while you're picking up that small trade?
Yes, always. Yeah, right.
Sometimes it does.
Yes.
Yeah. So that's the only caution. Mm-hmm. But again, this one didn't set up anything like the YM. As far as the pattern on this basing thing, as you see, it didn't set up anything like the YM. The Nasdaq was a little bit more similar. The Russell or the ES a little more similar, but the Russell just didn't set up like the basing pattern. But the point is, guys, and that's why I know we're going to cover. It's a shotgun thing here. We're covering a number of different things.
Muted.
And that is, we're having 3 or 4 different discussions, and it's kind of helter-skelter. But that's why watching other contracts becomes really important.
Unmuted.
Is it allows you to get a bias, a judgment. And if we actually go, in fact, Carl, could I have you mute your mic? There you go, buddy. I think yours is giving us the feedback or the echo, and that's okay. We'll just deal with it. It's not a problem. But let me flip up. Let me go open up this other chart, and I've got to do this, guys. I apologize. Oops. I don't know which one it is now. Hang on, let me see if I can. There we go. There we go. Let me go flip this over, and what I'm showing you is, let's go look at the YM, for example, on this, and these cursors will line up, so we can see if we were actually looking at this contract and saying, this is when I want to buy this. Let's just use this for an example. This is when I want to buy this. Look over here on your other chart. It lines up with the 948. It lines up right here with this bar. Again, different picture, but in looking at another contract, this is the picture we're looking at. And if we get a similar failure somewhere else, we can take this other contract. We could have taken this contract. Again, our stop has to be down here, but none of these violated our support area, and finally it broke out and it took off. Now, so as we look at, that's what it's important that we look at other contracts and other time frames. That should be,
So,
yeah.
quick question. If you see a good pattern set up then in a different contract, say the YM that I know you don't like to trade, will you switch over then to the TF and find a way into it?
I will. Or if it's the NASDAQ is acting well at that time, then absolutely. I'll switch over and let's just go look at the NASDAQ for this moment. And let's just see how it was looking at that same moment. And the other thing, this one actually looks a little bit similar. But this is the 948. So here's the bar on the NASDAQ. So and when I do this, guys, what I'm looking for is I'm looking for which contract has the most void above me, and which one's showing me the best strength, the best pattern on the day. So yeah, if I see that the YM or the ES are setting up well, and I don't really care for the amount of room they have or what's going on up there, then I'm going to try to find a better contract that will maximize my profits. Absolutely.
Even though the picture it's showing you may not be quite as good as
may not be correct. But see, even though you're right, and that's why we have to look at least I like to look at the other contracts, because this picture on the NQs doesn't look quite the same as far as the picture goes, but the message is essentially the same.
Right.
We get that breakdown bar, and that comes way late, and by then look where the NQs are, or the NASDAQ was showing relative weakness. The YM has actually is a little higher here. This is the red bar. This is the same time frame. So if you can see the conditions that exist, and again, guys, as we put all this stuff together and you assimilate everything you're seeing, do the conditions, the overall conditions still, are they still complementary to your idea? And the answer is yeah, because we as we talk about ticks, and as we look at this other tick chart down here below, one of the things that we spent and watched, I don't know if we were, I forget, guys. But this is actually, again, when we get into ticks, and this is the part that can get real confusing. When we get into tick divergences, one of the things that is really important to watch is, are they our friends and are they our enemies? And this is clearly, and we don't know until this develops for a bit, all right? But this is clearly a friendly tick divergence. And the reason being is that this now is not breaking down. And like I say, initially, this would be of concern. If I were long, frankly, that would be of concern because of this tick divergence. I know I've got resistance up here. This would be of concern to me. But having said that, guys, as this thing starts to develop, we can see, and the same thing over here on the YM, we're not getting a breakdown of any support. We're getting a very bullish consolidation. Ticks are retreating. They're coming back to the zero line, and in fact, we got a tick reading all the way down to minus 500. One of the lowest tick readings in this base right here. And it produced, this is the great part, guys. Anytime you see a tick break like this, now I know this wasn't a significant, 500 is not significant, but compare that with everything that's going on. This is the lowest tick of this whole base. And what did it produce? As soon as it went off, it produced a bar that didn't break the low, but in fact popped back up and took out the high. You see that, guys?
Yeah.
This is a sign of strength, not weakness. The fact these ticks are diverging tells me the accelerator's coming off, but we're not losing any value. The prices are just going sideways. This will take a moment to rest, and then it will take off again. And that's what happened here. So this is how we read a tick. And again, we won't know that immediately, but as this develops, this is a key part to this whole consolidation and this whole bullish base, is that as these ticks, or as this thing bases, it's okay. We would actually want to see these ticks pull back and stay fairly mute, because it just gives the contract time to reload and get ready for its next push. This is a friendly divergence. Now, had they broken support, and we got some volume on that break, and then they came back up to retest, and then we had a tick divergence, then the answer is no, it's no longer friendly. The more you guys watch these ticks and watch how they develop and how they act during certain conditions, the better off you'll be when in reading them and applying them into your trading plan, and knowing when the ticks, you guys will hear me talk in the room quite frequently that I want to see a tick push. I want to see the ticks confirm this move. And that's really essential, is when we start seeing price action going our way, and we're seeing either breakouts, breakdowns, we're seeing price moves, we want to see ticks. And this is a really good example. This breakout that occurred here, now I know this is the NYSE, but if we flip that over, let me get rid of these lines because I'm not coming back here, I don't think. We know we're going to get a tick push on the breakout on YM. Oops. So here we go. Here's our breakout bar. And here's our tick confirmation. Okay, guys, that's really essential. It's really essential that we see this event. And this is one more of those pieces of the pie that says things are acting properly on the breakout. Without this would be in great jeopardy. And this came together very nicely. This would give you confidence. And if this goes to extreme on a breakout, guys, it's not a negative event. Now, again, write this rule down. This is just like a climatic bottom and top. A tick extreme that starts a move is positive. It's a good thing. A tick extreme after the move's been underway for a long time, not so positive. Usually the end of the move. Look at this tick over here. It started the move. It's a good tick. But you don't want to see a tick extreme after the move's been underway for some time. That's not so positive. Then you want to just start tightening stops. Doesn't mean you quit, but you want to start tightening stops.
Yeah.
Okay. Any questions on that stuff? Boy, you guys are quiet. I hope it's sinking in.
Shit.
Good.
Yep.
How do you interpret the tiki?
How do I do what with the ticky, Carl?
I mean, you mentioned it before in the room from time to time about the tiki extremes.
Yes.
And I have them here. I have a noise, boop, when the tiki comes. How do you interpret it? I mean, I know how do you do the ticks, but...
Let's talk about them real quick. And I don't have them on this chart. I'm going to go put them on this chart, and we'll see them. I haven't used them in a little while, but let me show you again, guys, what you're seeing is green bars are tick extremes, and anything over 25, I think, anything over 25 turns the bar green, anything under 25 turns the bar red. Now, the way these tick extremes work is, this is when on the Dow, this is the Dow tick, the tick E, and when you have 25 of the 30 Dow's components trading on an uptick, you're going to get this thing firing off. Or if you have 25 of the 30 or more of the Dow components trading on a down tick, you're going to see this will fire off, and you'll get an extreme reading. So at this point, you measure any of those bars, and we had 14, we had 15 of them trading on an uptick. This is much like a tick extreme. So initially, when the bars get started, I want to see, it's good. I want to see, for example, this bar. We got a ticky extreme that popped when this bar started. Now remember, even though the computer split the bar, if we change this to a different time period, this is all one big move, one big solid move with very little retracement in the whole process. We go down to we go down and look at a 100 tick chart, and you'll see it very clearly. Should be right here. This is what started the whole thing, right here. And here's our tick extreme that fired off right here. And this thing basically moves up with very little retracement all the way up. So the way I read this, and the way I interpret the ticky, is that I want the ticky to confirm a move with good, it's nice to see a tick extreme start a move, but it's a warning when you get a tick extreme at the end of the move, which we got here.
Okay.
Because this becomes a bit of an exhaustion condition. Same thing with volume. Now, they're not all going to line up perfectly, but volume initiates the move. And our volume stays pretty high. In fact, one of the last bars is at 18, right there. That's another high volume bar. Now, that's not extreme by any means, but the ticky is the same thing. As you guys know, volume starts, it's good to have volume start a move, but volume usually ends a move. The same thing on the ticks, or the ticky. You want to see ticky starting the move, and when you get one going off at the end, it's usually going to be the end. Now, you will get false signals along the way, okay? But, again, generally speaking, what you're going to do is you're going to watch them for initiating a move and ending a move, and use them with your volume, and use them with your ticks. And they kind of give you a second, another confirming opinion or condition that's not bad to see. You can have a little more trust in the breakout and the move when you get the ticky extreme.
Okay.
Is anybody else familiar with the ticky?
I have a question for you. Is the
Yeah, Jose.
symbol you could get up, or is it a program, or
Oh, step a little closer to your mic. I'm hearing most of it.
sorry?
No, that's cool. You're good.
Okay, so sorry. Is the ticky a symbol that you could bring up? Is
Yes,
it
actually, it's if you're using for e-signal, it's the what is it? The dollar sign to start a symbol.
What would be? I don't have e-signal.
Okay, it's TICKI.
TICKI. Okay,
That's the root.
You'll find it. Okay.
Yeah, if you search for the TICKI, you should be able to find it.
Okay. Thank you.
In the real tick F10, you're gonna see it.
I'm sorry, Carl, say that again for me.
I'm sorry. He can find it in the real tick. They have it. I used to work with real
Okay,
tick. Yeah.
cool.
Okay, good. Thanks.
Cool. All right. Now,
The ticky's only tied to the Dow.
it is. It's the Dow ticky. It only measures those 30 stocks.
Okay.
So is it critical? No, guys. In fact, I don't even watch it much anymore. I've got an alarm, an audible alarm that goes off over on a 5-minute chart. I have the ticky, and I have an audible alarm that just beeps when it hits. I don't even look at it anymore. because I really don't care what it's doing. These are meaningless, these highs and lows. I'm not reading them like a tick chart for divergences and stuff like that. They're really rather meaningless. I'm only concerned with, does it become extreme, either high or low? That's the only thing that I'm concerned with. So on a 5-minute chart, it's always hidden, but I have it there for just for the audible alarm that pops in. And that's the only time that I ever use it. Dave, let's go back, and guys, here I'm gonna challenge you to do something here, and that is for a little while, and just try it and see if it makes a difference. Okay, get rid of your moving averages on your charts.
Okay.
Okay.
I
E-minis.
thought about that, so yeah.
E-minis. And in fact, one of the exercises that I want you guys to do is, for trading, let's get rid of the 20s, the 30s, the 15s, the 5.8s, the whatever the heck they are. Let's get rid of the moving averages. And my experience has been is that the E-minis don't respond as consistently to those as do stocks. Okay? But more importantly, if you want to put them back on a little bit later, that's fine. That's fine. But Dave, I think one of the problems is that one of the things that got you stuck on this trade could have been that 20. Okay? And I don't know what you were necessarily. Let's just put one on. And I can see what you're looking at here. But the point is at some point maybe this is going to be valuable to you again, and you can use it. But look at this moving average, and if you're saying, well, if it's above the 20, I want to be thinking long. If it's below the 20, I want to be thinking short. Is that kind of how you've been using it?
No.
Okay.
Not necessarily, and they're probably, like I say, I wouldn't necessarily have taken along there, but I think the 20 would have been one thing that would have stopped me from thinking short.
Okay.
So
Yeah.
it's probably good to get rid of it.
Well, it is for the time being, and guys, and the reason being is what would be good is guys, the way that your trading is going to jump up in every respect, and as simple as this sounds, there is no substitute for this, and we're going to spend a fair amount of time with it. There is no substitute for reading support and resistance. There just isn't. And there's not a moving average, there's not a Stochastic, there's not a CCI, there's not an RSI, there's not a on balance volume, there's not an indicator that will give you more information or help you more than simple bar by bar analysis, and the more simple they can become. And that's why I find I got to show you this, guys. I got to show you this. Okay? I'm not joking. This chart was sent to me. Let me find this chart. You guys are going to die. And I'm not kidding. I see this stuff all the time. Let me see if I can find this chart. I may not be able to find this chart, guys. This thing had, I kept it because I thought, you gotta be joking me, but I'm not kidding. This thing had, I think 8 or 10 studies on it. And there was 4 or 5 above the price chart. There were another 5 or 6 below the price chart, and the price chart was actually the smallest part of the whole entire, the box they had the price chart in. It was the smallest box of all of them, and the studies took up more space tremendously. I mean, you had to filter through that. Point being is that I know the guy was not looking at price. He was looking at all of these studies, which were cool. I don't know what any of them did, frankly. I mean, it's cool because you got a very detailed, very complicated, cool-looking chart, but it's not practical. And so what I found, and guys, I'm just going from my experience, but I can tell you, as I've coached the other traders and I've worked with other people, and that is, the simpler we can get this initially. You can add those other things later if you'd like, but while you're still working on your consistency and you're working on profitability and getting your batting averages up where they need to be and your sharps and all that kind of stuff, while we're going through this coaching, I want you to get rid of a bunch of this stuff. No more fibs, no more Stokies. Don't use them. I don't know if anybody is. I'm not seeing them on your charts, but let's go to the simplest things. Yes, leave your pivot lines on there. Let's get rid of moving averages, and let's go and let's just start reading support, resistance, and bar by bar, and let nothing else influence you, because all those other things, you've heard me say this, all those other things are a direct response of price. We don't get a moving average turn until price turns. We don't get a Stokey cross until prices cross. Those things are all subordinate to price and or volume. And those are the things that we want to watch, and the more congestion, the more conflicting information we get, the harder it is for us to focus on price.
I have one question.
Please.
I agree with you, but in the smaller time frames where you get a limited amount of actual price and bars showing, would keeping one, whichever it is, just allow you to confirm the trend that you might not be able to see just because it's limited in terms of how much data you're getting in there?
Maybe, but let me ask you, let's go to a 5, okay? Let's go to a 5. And guys, we got a major breakout failure now, guys. This is going to come back in. So what do I want to, okay, let's talk about that, Jose, and then I'll come back and we'll talk about this, because I can't do anything with this right now. I want to retest it. Now I broke support. In fact, no, we're going to talk about this, guys. Look, your ES has not done this. The YM has not done this, and the NQ has not done this. Only the Russell. So I'm a little cautious to be aggressive here because of the conflict. But as I read this, guys, now we're breaking support. If this is a 5-minute, go back to our rules. There is our high. Here's our major pivot. Doesn't matter which one you call it. We've broken that now. So what are we looking for now? And if this becomes a head and shoulders, it meets our definition. Will it become? I have no idea. It could become. But what I want is a retest that fails now, or some failure, and we're not going to get a retest of the high. That'll be unlikely. We've come far too far into this. But now the head and shoulders is more likely because of the depth of which we penetrated. But we'll have to watch the other contracts for confirmation. If they hold this base, the other contracts are holding this base. But the weakness of the Russell leads me to believe that it'll probably transfer over into the other contracts by the time the end of the day comes around and we get out of lunch. So just keep an eye on that. But now we're looking for a retracement up here that fails. That can get us in. And we'll keep an eye on that. But let's go back to that assumption, Jose. And I'm not going to tell you no or yes. But I'm going to provide one argument to say, or that I'll just provide one argument with it. Let's look at this on a 5. And if we do what we want to do and say, okay, there's support, there's resistance. Okay, we broke it. We've got now a lower low. Where's our resistance? Well, ultimately it's up here. But now we have a higher high. And we actually have a head and shoulders there with it. So our bias has to be, this is a trend changing event. Where's our trigger? We have everything in place to say, where's our trigger? If I don't like trading off the 5, then I have to drill down and look at a 2 and a 1, because I know on a 5, this is complementary to my idea. Okay, whether or not we took that short, do we really need it to have it on a, do we really need and let me go pull this up. Let's go over and look at a 1. And can we find an entry on the 1? Oops, that's a 2. Darn it, Neil. Okay, here we go. Here we go, right there, right there. There is the 2-minute entry. There's our 2-minute above us. Here's our 1 minute here. Okay, can you find an entry on the 1 minute, Jose?
I do, but the question is, my question was this, and I'm glad you put that one up. When I look at the 5 minute, obviously I could see, because it's a full screen chart, it's easy to see the other areas.
Okay.
When I look at the 1 minute, and obviously let's say we're at 10:30, okay, without maybe one moving average, it's hard for me to just read it to see that it's on an uptrend and a downtrend.
Let me ask, do you have a 5 minute up somewhere else on one of your monitors?
I do.
Okay, so is your 5 minute big enough to see the head and shoulders develop?
Probably.
Okay.
Probably.
Then,
and yeah, I mean, I agree that once you're able to, and it's actually, to me, it's a question of comparing pictures and accepting that those pictures are the same thing. Because, you know that I trade from the 1 and the 2. So my eyes really are more focused on the 1 and the 2 than on the 5 to 15. And although they're there and I look at them, I'm more, my eyes pay more attention to those two.
okay.
So sometimes, just for purposes of reminding myself when I'm looking at it that, that's an uptrend or a downtrend or flat.
Okay.
Just a visual thing.
Okay.
And,
Well, if it helps you, then Jose, like I say, I'm not going to tell you to not do it, but my point is this, is as you look at your bigger time frames, and that's why we do the exercises in the morning or in the evening, whatever, prior to our trading event, that we want to identify our areas of support and resistance on our larger time frames. And then in our minds, we should be identifying, and we should know, and this is good for all of us to hear, is are we in a 15-minute uptrend, downtrend, 60-minute uptrend, downtrend? The longer time frames, and the longer time frames tend to affect the shorter time frames. So if the 15's in an uptrend, the 60's in an uptrend, and the daily's in an uptrend, even though the 5 may be in a downtrend, the support is going to be more support. And we're going to have probably more trouble getting through the 5-minute support levels on the downside because of the 15-minute support, the 60-minute support. So understanding the trend is really, really important. But as you work down to your smaller time frames, here's one of the things that really just has become natural to me now, kind of part of the whole evaluation, and that is, and I like to trade like you do, Jose. So I think this will overlap and be helpful. When I'm looking at those smaller time frames, in the back of my mind, I'm still asking myself, does the 5-minute complement this idea, or is it conflicting? And if even though I may have a good 1-minute setup for short, say, and I'm right against a wide range, full-bodied 5-minute bar, I'm not taking the 1-minute setup. It's going to be real unlikely. I'm going to take a 1-minute setup. I'm going to wait for something more definite. You see what I'm saying? So as you look at the larger time frame, if you can get your 5-minute to be complementary with your 2, and your 2 complementary with your 1, your trading odds are going to go up dramatically. Now, you're never going to get a 2-minute complementary with a 15. That's just too far out. But if your 5 can be complementary to the 15, or potentially with the 15, then keep working your time frames down to the lower. But I got to tell you, don't fight against a big 15 bar. Don't fight against a big 5-minute bar. Don't counter trade against them if they're not complementary to the idea. So if you want to use a moving average to help you on the smaller time frames, that's fine. That's fine.
Honestly, I don't use them that much to begin with, but just from time to time.
Okay. If you find that they're helpful, great. But my point is, and I know you guys got the point, and I won't belabor this any longer, is the more stuff on our chart, the less we tend to look at price, and we look for the magic grail, that magic answer that says, this is the cross that I need to wait for, this is the cross of the moving averages, is whatever, that I need to wait before I can trade. And that's not true at all. Price is king. And the more pure we can read price and how it's acting or how it's not acting, the better our odds are going to be in trading. And then those things can be confirmation if you need them to be. But too many people start first with using those as their primary focus and don't put enough emphasis on price. So we're just going to spend the time the next 5-6 weeks, we're going to spend all of our time dealing with price. Now, again, if you want to put them back on when we're done, that's up to you. But initially here, I want you to get rid of all that stuff. So we're just going to be looking at blank charts. And in fact, and you guys are doing it actually, and I like it, is that a lot of your charts are coming into me without pivot lines. And that's okay. Now, I want you to trade with them because we're going to get reactions off of pivot lines. But, when we're doing this coaching, you're not seeing pivot lines on many of my charts. When we go through these price and these bars, and we go through bar by bar analysis and the coaching stuff, I'm not putting them on there because it's a distraction to me. And I think it's a distraction to you. So I like the fact that you're doing it without your pivots. And then you can make reference, I sold because I'm coming into a pivot. That makes sense to me. I like it. No problem. So I like the charts I'm seeing, guys. In fact, at times I'm looking at the chart and thinking, why are these guys even asking for coaching? Shoot, these are great trades. These are great trades. They were. By and large, the trades you guys pulled off, the charts I've seen, they're good trades, you guys. So the question I have to ask you is, have you guys written, I see it in your plan. I see that you guys have, and I know I'm belaboring this again, but think about this, because it really, as you start to revive your plan and start fixing your plan, and as it starts to evolve, I want you to be really focused on this. What are the rules to the exact setup? Now, I know that I must do this and I must do that, but the rules that I'm seeing are basically quite general. So, for example, next time you have, you can change. Next time you have a head and shoulders set up, and that should go into your plan, I'm going to take a head and shoulders, and if I do, these are the rules that the head and shoulders must live by. I want to see those rules in your plan. Now, if you find that you like a little bit different tweak to those rules, that's great. At least you have, rules. Same thing goes with that basing pattern. Now, if you want to tweak that a little bit to whatever it is your preference is on where you want to enter, that's fine, guys. But I want to see the rules. Because too oftentimes, we all have fairly general rules that I won't, trade between 9:30 and 9:45 or whatever. That's all fine. That's great. Or I won't do this. I won't do that. But what I didn't see in any of the plans is hard, specific rules as to how price must act, what price must do, how the setup should occur, where it should occur. All those little details, I'm not seeing that yet, and that's the stuff I'm gonna make you put in. But again, you guys are going to live with that, and it's going to change from time to time. And as you find those setups either continue to work, you'll modify those a little bit, and if they stop working, you're going to modify that. A few years ago, I didn't have that second entry as a rule on my Head and Shoulders. But the last couple of years, I found that the reliability of that Head and Shoulders became a little less without it. Now, that's a 2-minute rule. It's not a 5. You usually won't get a second entry on a 5. So it won't work on a 5. It only works on a 2. So there's 2 good rules, conditions for trading that you should put in your plan. And then, like I say, guys, this is your document. This is your roadmap, and it needs to be yours. But I'll give you some things that work for me, and then you guys can make adjustments as you please and as you want. Any questions?
I have no questions, but if we have time, I would like to, if we can, I don't know if we have time.
I have time, guys. You know, I'm not trading this stuff today. If I get the right setup over here, I would trade this to Russell. What worries me is I'm looking at the other contracts, and I'm not seeing the same things occurring, which worries me that the Russell would probably be poor results, even though it's setting up properly. And as we go through the definition, guys, it looks almost like the same Head and Shoulders that we just came away from this morning, or earlier today, right? No, yesterday. Sorry, this is a 5-minute. It's looking like the same similar setup, but will we get the same results? Probably not, because the other contracts look very different. So let's go. Yeah, Jose. And guys, I'm good for a little while here. So if you want to hit some other charts or some other setups, let's talk about them real quick.
What I wanted to do, if I can, is this morning I decided that I was not going to trade, but I was going to contemporaneously mark my chart.
Great.
So as it was going, I was going to mark it. So if you allow me, I would like to show you what I did. I took actually one trade, and that was subsequent to that. And actually, I think it might be similar to, you took a Euro trade today, right?
I did.
I think it was going to be a similar one. But let's.
What chart do you want up?
Actually, can I project mine?
Oh, heck yes.
Because it's already marked up.
Hang on, let me go get it. Okay, I'm going to change facts. There you go. And yes. And you are now the presenter.
Okay. Can you guys see it?
Yes.
Got it.
Okay. So I have 4 screens, but on my main one, the one I trade from,
Okay.
I have a 1 and a 2. And this is the Euro trade, the Euro chart that's up. So
Okay.
this morning, like I said, I wanted to mark it up as it was happening. This way it forced me to talk about what I saw, and it forced me, I knew I wasn't going to take a trade, but at least it forced me to identify things.
Great.
So the way that I saw it going back a little bit was that there was a resistance around the 3250, 3260, and there was support from earlier on that came, I think it might have came a little lower to 3232. So when I started marking it up, basically what I was doing was I said, I'm not going to trade until we get out of these 2 areas.
Okay.
Because the only thing that was doing was just going back and forth. Obviously, there were potential trades of taking it at the low and let it go up and then sell when I hit resistance. But because I wasn't going to be taking the trade, I decided to just identify.
Okay.
So as we were getting to, and if you look at the 5, I mean, I literally marked up here and I typed in area of resistance, and then down here was area of support. We then had a failed breakout here, a breakdown, I'm sorry, which came back into the same area, and we had a second one here. As we were getting closer, I started marking it here, and here I get confused whether it's a bear flag or a bull flag. But this arrow basically said to me that I anticipated that if we're going to break, they were going to be breaking down. And this arrow was actually put in probably around here. So the prices weren't even there. And in fact, they did break down. Now, the concern obviously was the breakdown here was that this area of support would have, just as this one did, pop it right back up. So, but once it got to about here, I think this bar, I typed in this area now could be resistance. Now, following up basically what you were saying about trying to anticipate what may happen next, I put in this arrow which says if the prices come up to this area, then it's shortable. I'm going to take a short if it comes around here. And it sets up, obviously. It never did. It came back to this area, which had been the low of the day. The low for the session overnight was 03. There was support here, which I had previously marked at the 13 area, and it tried to bounce and came back down. And that was the main reason why I said, okay, this obviously now appears to be working as a system too. So if it comes back up and bounces around here, I'm going to try to short it around here. But it actually did not. And we're looking at the 1 minute. So that thing just took the low, which was the 03. And I was hoping against all hope that it was going to come back to this area and take a short. It never did. So it stayed around where the low was for the day, and then it came back. So I then saw the second channel forming around here. Now, I'm trying to think where I took the trade. The other thing was, I looked at the dailies. So even though I didn't see it here, I saw that there was an area of support on the daily at 76 and 72. And those were the 2 previous days. Actually, if today's Friday, I think it was probably Friday and Monday. And those were the areas. So my feeling was that it was going, well, it was either going to go right through or it was going to hold. Here, I'm trying to see where it was. It actually got in. Let's make sense. When I saw this area here, I recognized it. Tried to break down, it couldn't do it. I recognized it as being an area where people began to step up. Normally, this would have been my stabilization bar, and I would have took it over here, which would have been 86. But this worried me too much, because the other thing that had happened was we had not overtaken any 5-minute bar. So I wasn't really too strong that it was going to do that. It could have continued to go down. But I also thought that 93 area 94, if we were able to overcome that, which is around this area right here, that we had a good shot of coming back up again. So originally I was going to take it over 94 when it was around this area, and it failed. It never hit. Actually, I think it was 93. There were 92s. So I originally was going to take it in 93, and I put it in an order of 93 because I thought this bar here was going to propel us. Never triggered and came back in. Now, this area now became an issue, but I said, well, potentially we could do this and come back up. So I let it come up again, and then I actually took the trade long, a 97, which was above this bar. Right, it was above this one. So I got in here, which was actually on the 2 right here, this bar. So I went over 96, I got into this bar because I had seen that we made a higher high, and then I said, well, this is probably going to be a higher low. For purposes of the 2 and the 1, we had broken the trend of continue to go lower.
That's true.
So I took the trade here. I took, and I knew this area was going to be a problem. In fact, I had marked it on both of them. So when I got in here, I took half of my position out at 09 right here. My stop when I got in was here. So it was 90, and my entry was 97.
Good. I like it.
When it hit 09, I took actually 1/3 of my position off. And I kept the other 2/3 down under this bar.
Right. Done.
It tried to go up. It didn't make it. So, I knowing that this was a problem area that I thought it was going to be, I took another 1/3 at 05.
It's not
And I
finished, but
took
now it's just people
The
talking.
remaining 1/3, and I
Guys
put it
talking,
under
okay.
this bar, a 99.
Good.
And obviously, you saw what happened next.
Yeah.
Just took us out. It took me out.
Okay.
And that was the end of the trade. And if we go a little further up now, actually, which is pretty funny, it just went to those areas that I had marked up here. Let me see if I could. Might be able to do that. Which was the area that I had marked. Peeked in and came right back. So my original idea that those areas, when I had crossed them out back here, was going to be a problem, obviously paid off at some point. And had I taken, because we started the class afterwards, had I taken another trade around this area, because there might have been some setup that came around here, I would have left, took whatever it was that I had off around here somewhere. So I'm just trying to get an idea from you whether, you know, what my reasoning or thoughts or made sense as they were going on, because literally whatever information I was writing down and I was marking, it was happening at the time and prior to the other bars developing. So now I'm open to your criticism.
Actually, I don't have any, Jose. I don't. As I see what was going on, with your time period and what you were doing, there really isn't any criticism. Let's go back and look at your entry, because now I actually took the euro long, and I actually waited a little bit longer than you did, and I'll show this to you guys because I like to trade off of the ones and twos, but I also want to wait, and I watched this thing specifically for the entry that I took, and it came because naturally one of the things that I typically will do is I say, okay, what do I want to see happen? And because of the conditions and what was going on with the euro there, I wanted the way that the way the euro came down, I wanted the euro to retest before I got into it. So yours was actually, and can you guys see me move this cursor? You may have to, Jose, you may have to go up and allow everybody to have control.
And that would be
I don't know where the
make another 10 to give control.
yeah.
Oh, got it.
Yeah. Okay. Now does it work?
Yeah, since you have control.
Yep. This is your entry, right? Right over here, essentially.
Correct.
On the two. Okay. Now, again, walk with me through this, and this is why I have no problem with this trade. And that is, from the bottom, you have a little breakdown failure. This thing was getting extended in terms of time. You go over and look at your 60-minute, and you're sitting on a pretty significant 60-minute base. Right?
Correct.
At the same time, go look at your dollar, and your dollar is at a significant 60-minute resistance area.
Correct.
Funny how that works. But you traded above your first point. Now, this isn't a 5-minute, but this at least gives you some reassurance that you've now taken out some resistance. So you've traded above your little pivot high here. And this is you could look at this as somewhat of a sloppy W. Okay, even though we essentially it's a new low failure. But regardless, you traded above this pivot, and even though this is only a 2-minute, when you came back to this, the pivot held you. The pivot held you. This is where it should hold you. This entry, there's nothing wrong with this entry. Now, like you say, you're smart enough to say, I'm going to take some stuff off pretty quick because I know I haven't dealt with really any of the overhead supply yet. This is our first move into it. And I haven't dealt with much of it yet, so I know I'm going to get slapped as I come into my first areas of resistance, which in fact you did. So taking something off is great. No, I have nothing that I can say about this trade that wasn't good. Can you change your 1 minute over here on the left to a 5-minute for me?
Sure.
Okay. Let me show you where I actually bought it. Okay. Because of the way this came down, and actually, Jose, your evaluation on the whole thing is spot on. I have no issues with this at all. When I find that when this baby will come down this hard, alrighty, but because I know I have 60-minute support, this is the bar that I bought. This is the bar that I bought. And I bought that right at 60. I think if I remember right, 60 was the high of that, 59 was the high. And I bought it one tick above that bar's close. The 2-minute didn't really give me it was an okay entry, but nothing significant. So I didn't try to take the 2. I'll move over and look at, see what, 11:30. There. So this is the 2 time period, and as I was watching, the 2 didn't really turn my crank, but it's about the same area. So I ended up with this right at, as I recall, right at 60, and then I offered out at 10. My target was 10. No, not 60. 80.
I think it was 96.
96. Let me go on my 5 because I can. Yep, it was 96. Excuse me, 96. Sorry, guys. So here's my entry at 96, and I just offered out half at 10 because the same thing. I knew that this was going to be problematic, just as you. And for me, guys, and this is one of the things that I'm going to beat this in your heads, is I love these retests. When I get a climatic move, I don't like to buy the bottom Now, if it's perfect, sometimes I will. But I love to buy these retests, and most of the time, I'm going to buy these retests like this. This is a great retest. And so I bought this baby. I took an offer part out of 10, and when I got a new high failure, you remember how we talked about what should happen when we break out of an area? When that thing came back in, I took the rest of it, about 04 or 05. I'd have to go look. Because I thought, no, we broke out a couple little double tops up here, and it didn't work. Here it is on the 5, or on the 2, or on the right-hand chart. These little bars, and I thought, great, this is all looking good until this red bar formed. And then it didn't look so hot anymore. That bar should have never, bar should have never really happened. So I had a little new high failure. So I killed the other half of this. I didn't let it come back down and take me out. I just knew that wasn't right. That's not how this thing should work. So I like what you're doing. I do. I like your setup. I like your rationale. I like the fact that it held some support. Those are all real critical issues. For me, and normally, guys, kind of the day that we're in, normally this retest here will give me far more than 10 or 15 ticks on at least half of my trade. Because it came back so hard, I says, I'm not going to let this go. Normally you'll get more out of this trade, and have it come back up in there, I think you're absolutely right. That was my original target for part one of the trade. I thought I could get here before I was going to have to sell it, but these things it just came in too hard, and I said, no, I'll wait to re-enter. And I never re-entered. But the key to me is Jose, and if you go back to you go back and we look at this on the 2 over here, this isn't much of a retest. This is just a bounce off support, and it's okay. I don't have a problem with that. I think it's a good trade. I think you read it well. No issues there. The higher trade odds is this retest on a little larger time frame, because this is what eats up the rest of the sellers. This is a major failure for the sellers on this 5 minute, and these retests become so powerful and far more reliable. And there's nothing wrong with your scalp. Don't get me wrong. As I said, no criticism whatsoever. Good trade. But then if you get one like that and you're scalping that first little move up, if you can get a retest on the 5 guys, then you can start holding positions a little bit longer.
She can call in 2 days.
Just right through. So you did a good trade.
It's very dangerous.
I just chose to be a little more conservative on that trade.
Even with
and you got as many ticks out of as I did, maybe more.
To move the card, I know.
It was a
Be
good
careful.
trade.
You don't sign nobody's name.
Lions in the jungle help me there.
We can talk. Don't be nervous.
Well, it's working for you. Don't change it. Like I say, you guys will have to be the judge of that. But as far as you read what was going on, I think it was a good read.
And I was hoping that it actually on the first one that it would come back around this area over here to feel what drop.
Yeah, and what stopped you is you were coming into that 60-minute resistance or support. I guess it just wanted to get there first. And so you did the right thing. You had a plan. You didn't abide by your plan. So you said, I'm going to wait. Guys, anytime you have a plan that works, guys, it's great. That's what kills traders, is that they're so whimsical. They'll take any setup under any condition. They're taking a long setup against the trend. They're taking short setups against the trend because the